Okay, hello everyone. So this is an update for CycleEdge. Now, this is for the members only, right? So in the members area, I'm updating it so we'll have a monthly report for the 5 assets at a specific level. So this is a much deeper, information than we had before. So let's first of all take a look. Now, your guys already know all of this, so there's nothing to talk about in this part, right? However, there is this new addition here, CycleEdge reports. The June swing days period was here before. I'm going to put that into the archive section. This will no longer be there because you're going to have the mother of all reports. If we go into this is the latest CycleEdge reports. Every month, this is what we're going to have. Now, I've downloaded some new ones today because there was a bug. Because this is a software and it's a fully integrated software that I have done, and I am not a software engineer, this has taken quite a bit of time and there will be bugs. But overall, the reporting is good because it's mathematical. The mathematical formulas are correct, but sometimes there may be a bug here and there. But overall, we're good. And I've tested it, so we should be okay. All right. And there'll be much more information than before. Now here, as you can see, let me just make this a little bit bigger for you. So hopefully you can see it, right? So some of them are looking like this, some of them are like that, but overall, they're all going to be like, they're not going to be vertical, but horizontal. All right. So we can just open anything we want. Let's open up euro dollar because I did a euro dollar trade in the video for the members area the other day. Now this, as you can see, is the report, euro dollar, and it's giving me the period here, 31st of December. It's from the 29th of July to the 31st of December. All right. So that's how it is. And it was printed on the 3rd of July, as you can see today. All right. Now, let's take a look. The first thing you're going to see is here a little bit of a coding. All right. So if it's a high tension day, whatever, you'll be seeing that here. And then you've got the bottom line, and then you've got a bit of code here like red day, orange day, yellow day, apex signals. Obviously, you want to be seeing them. You want to be knowing when they're going to be. The reason I've color coded stuff and given them grades is so that we can, like the more calculations are kind of like spot on, the higher the grade. But you have to understand, there's a grade A, grade B, grade C on the daily. Let's take a look. All of those are valid. All right. So for example, let's start with Monday, 29th of June. It's got a high tension critical. Now, this whole week was high tension critical. Let me show you. Monday, that's your Tuesday, Wednesday. So as you can see, it's all critical. Thursday, and then we've got Friday is like relaxed. Okay, structural, volatile, but it's not a red day, so we can relax. But you might say to yourself, Marty, now instead of having 1 or 2 days, we have got 4 days and anything can happen. No. Why? Because at the bottom we have the weekly insight, and in the weekly insight I've selected the best options that we have for the day. All right, for the week, I'm sorry. All right, for the week. So here, as you can see, I've got primary top pick, Wednesday, July 1, Thursday, July 2. All right, and then that has a 3-star. All right, as you can see. And then I've got a Monday, 29th of January to 30th of January. That is a 1-star. So you could say to yourself, okay, you know what? I will check both of them. All right, but I will enter when I confirm my setup. And that's the whole idea. The reason the whole week is volatile is because we're at a place where the market should retrace. And until the market, stabilizes to make that retracement, we get choppy moves, which is why I had the gold trade didn't go so well. Okay, the euro dollar did, but the gold didn't. So I got stopped out on the gold, but the euro dollar went really well. Why? Because I understood that we're going to be a bit choppy because it's a turnaround zone and the market is a bit indecisive. So you know what? Let's wait till Thursday. All right, and that's how it was, or Wednesday. So that's that. Okay, now let's get back to the daily. Now the information there is here is much richer than what you had before. First of all, let me make this also slightly bigger here. Hope you guys will be able to see it. I'll just make it a little bigger. Let's do that. Okay, so this is the daily insight. So it's giving you hours here, right? It's giving you a comment here, okay? And they're not to confuse you, okay? If you expect sustained pressure, okay, it means the market is like expressing the price where it is right now, okay? At the top here, you can see alert windows today. They have a few words of comment: sustained pressure, sustained pressure. On other days, let's just keep this in mind, right? On other days, you might find, look, momentum push continuation. Now this is gold, okay? Because from 135 to 605, we're expecting momentum push continuation. So what hour do I have between 135 and 605? We can check. Got 256 and 310, right? Expect momentum push continuation. You see the red text here? This is already gold, because for that time period, there could be a push in the market. And if I'm at the right spot, if I'm at the right price at the right time, I can just get in and do a trade along those hours. So if I take a look at euro dollar on the 30th of June, Tuesday, and check these hours, let's see what we have. Here we also have, look, 942.11, trap-like reversal. That is good to know. 315 to 650, momentum push continuation, okay? And then another trap-like reversal. So let's check those out. 1:35 to 6 a.m. on the 30th. Let's get to the 30th. I've got still one portion of that trade open. Okay, so this, as you can see, is the 30th, right? And if we take a look, 135 to 605. This is 135 right here to 605. Look at that momentum push into 6 o'clock, okay? And then what do we have? And then look, that's a momentum push continuation. Okay, so that is like good to know. Why? Because it's like the market is just continuing in that way. And then coming in at 940, trap-like reversal between 940 and 10 past 11. 940. Look, this is 940 here. Look what happens. Boom, and then back down. Immediate. This is a trap. They're trapping the buys. Market's pushing up and then bang down again into, let's see where this is 1140. All right, so let's take a look. 10 past 11, not 1140. My apologies. 10 past 11. Nice. Market back where it picked up. Then what do I have? I've got 315 to 650 momentum push continuation. So let's take a look at 315. 315. Remember, this is euro dollar. 315 momentum push into what time? 650. That's your 650 there. Right, 645. So you can see that's already for us a really, really good time period to looking at trading. And then obviously I'll be checking these as well, right here. Okay, so like when's a good day, when's a good time? See, it says here 10 past 7 minutes past 2 and 2:50. So I'll be thinking to myself, okay, so I should be ready for this around 2:50, and that's your 2:50. And 2:07 is going to be just there, 2:07. I don't have to rush anything because that whole momentum issue is starting at 3:15. All right, so we don't have to rush anything. Just, you already know the scenario. Okay, so what's there to rush? Just prepare in advance. That's all you need to do. All right, so, and then what do I have? Trap like reversal from 6:50 to 11. Well, let's take a look. That's 6:50, trap like reversal. So market went up and then bang down 6:50 until 11 o'clock. So there's nothing to do here. You don't want to be mucking around in the market around here. Okay, look, 11:50 is right when the market is closing, and the market traps once again, trapping the buyers and then skinning them over. All right, so that's that. Wednesday. All right, let's take a look at Wednesday because we had news on Wednesday. Let's see how it did. Let's do it. Wednesday, let's take a look at Wednesday. All right, here we are on a Wednesday. So high tension day. And this was a news day. Now, this report is going to bring these things out to you. It doesn't know about the news. Okay, it doesn't know when Fed's going to have a meeting. It doesn't know if Trump's going to do something nutty. All right, it doesn't know. It's just pure calculation. All right. So possible swing trade day. Okay, so it's a high tension day. So alert windows today. 2:50 to 4:25 in the morning. These are my hours, but you adjust your hours here. And I've also put here the exchange hour. So New York, for example. All right, because UTC +3. When the software comes out, okay, hopefully when I'm done with it, okay, you'll just enter your time zone and it'll give you that. Until that happens, we're just going to go with a PDF report. Okay. 2:50 to 4:25 in the morning. 2:50. This is 2:50 on that bar. Okay, let's make this a little wider. Okay, so the market is boom down. 4:25. That's your 4:25 bar on the 4:15. All right, and you can see the market just pushing down. All right, let's see. So we can expect these events to happen. Then I have a flash breakout volatility from 1:30 to 5:05. Now remember, 1:30 to 5:05, but you also get the hours, right? The daily hours plus there is here. There isn't here. So there was no trade hours for this. Okay, it just gave you that. And we've got a shock day. Okay, if this doesn't give you hours, what are you going to do? You are going to use the hours I give you in the weekly market timing, the overall hours. These are still going to be there, okay, because the overall hours for the whole system is important. So I'm going to keep them there. CycleEdge doesn't do it. Okay, CycleEdge is asset specific. Okay, so if you don't have any hours, what should you do? Well, maybe you should just chill out or look for flash breakout volatility between 1:30 to 5 o'clock, because 1:30 to 5 o'clock, let's see what's happening on a Wednesday. 1:30. This is your 1:30, guys. Flash breakout volatility. Boom, boom. All right, so that's volatility. Sometimes it'll just go in one direction, nice and easy. and that's it. But look, it's a shock day. All right, shock day can be a good day to trade. You just have to be careful. Okay, so knowing it's a shock day is important. Yesterday was a routine day. It wasn't a shock day. Okay, but here we've got a shock day. All right, and then I've got 505 to 9:15. Again, I got a flash breakout volatility. So let's take a look at 505. Look, this is the 5 o'clock bar. And then bang. You see how it is? Like from here, bang. Up here, bang. Into 9 o'clock in the evening. Right? 9:05 or whatever it is. So that's the 9 o'clock here. Okay. So just imagine how, these are like pretty much spot on. You see, bang, bang. So looking out for these is the way to go. And then you can really time your trading. If there is a volatility, knowing about it in advance obviously is going to be very, very beneficial. All right, so if there is no hour, just use the regular overall ones, or you can, within the gap here, you can match a price from your technical analysis, because we need time and price together, and just nail it that way, which is also fine. So that was Wednesday. So let's take a look at Thursday. This is Thursday, and what do I have on a Thursday? Now, as you can see, it hasn't given me such periods here like it did over there, right? So alert windows for today, I don't have. So sometimes you'll have it, sometimes you won't have it, okay? So what are we looking at? Look, we're looking for a shock day. Again, it's a shock day. So shock days can be, like I said, good days to trade. So it's a high tension day, possible swing trade day. It's a shock day, fine. Now, if you take a look at the weekly, let's get back into the weekly. What does it tell us here? Wednesday, 1st of July, Thursday, 2nd of July. So here are these 2 days that we're looking at. So Thursday, come Thursday, which is exactly what I did, waited for Thursday. And as I was doing the video for you guys, that trade was done then, right pretty much before the video, okay? And let's take a look. This is it. Okay, so that's the early morning, and that's when I did the video. Why? Because the market had gone up, okay, from here, and then it came back here. This is where I got in. Okay, not here because that's 3 in the morning, but here, okay, when the market came back, I'm like, okay, that's fine, get in here. All right. Why? Because that's like pretty much after that trade hour, that bar opened there and it's back in there. So we're like, okay to do that. Okay. It's a shock day. And on the daily, just think about it. We've got Wednesday and Thursday as a trade day. So market comes back down, bounces off the support where the market closed before. You can see how the market closed there, okay, and then opened there, closed above. So it's a bit bullish, so we're okay with that. So when it go long, okay, and this is what happens, all right, and then the market just takes off, okay. So when do you do that? Well, if you don't have that swing period like we had on Wednesday, right, you can take a look at these, okay. Now here I've got 321. I got 0720 to 820. I've got 303, 601. Let's take a look at all of them. This is the 3 o'clock, okay. Let's take a look at the 6 o'clock. This is 6 o'clock here, which is pretty much where my entry price is, okay. And then let's take a look at 719 to 811. 719 in the morning, 719 is there, to 811. Let's call it 815 for the sake of argument, okay, or 811 is on that bar. Let's make it exact, we've got nothing to lose. You can see here the market is afterwards just coming back a little bit to break out, And then I've got 321, 321. Now remember, I think that was the time when we had the news. 321 is on that bar. I'm being exact again. I'm going to get rid of that line so we don't get confused. It's just a trend line. I'm going to get rid of these as well so you don't get confused. I'm just marking up stop levels as the market goes up to manage the trade, but it doesn't matter. Okay, so you can see the market just bang. Okay, so that's grade A for the euro dollar. All right. And then I've got a cycle peak happening. Look what's happening here. Trend exhaustion and institutional correction from 321. And then I've got a cycle peak at 8 o'clock. And 8 o'clock is we're back down. All right, so that's your cycle peak here. But you can see this is a beautiful push to the upside. All right, so understanding that we've got certain hours happening and they're graded is very important, simply because we have to afterwards then trade accordingly to those grades. Rightio. So that was Thursday, right? That's Thursday. Let's take a look at Friday. So Friday we've got structural volatility. However, today's a holiday, as you know, so we can just flow with it. What does it say? It's a flow day. All right, so not much to do. It's going to be a flow day, but look, expect a V-shape retest. Okay, around 10 past 6. Expect sustained pressure maybe in the evening, but New York is on holiday, so we'll see how that pans out. Okay. Alert window 9:20 to 10:50, sustained pressure. So from 9:20 to 10:50, let's check it out. 9:20, that's your 9:15 to 10:50, that's your 10:50 bar. So there's a bit of sustained pressure. As you can see, this is where the market kind of like stalled. All right, so there's sustained pressure there. The market, the price is under pressure. And then from 245 to 615, a V-shaped retest. So, well, there's your V-shaped retest happening as we speak. All right, so it's 2:07 my time right now. Okay, 2:07. So that hasn't really eventuated yet, but those are the hours, 2:45 to 6:15. And then we have 6:15 to 10:20 sustained pressure. So the market can, come again up here somewhere and just muck around here and not do anything, which is fine. So it's going to probably go sideways. And with New York being closed, logical. Okay, so 2:45 is that bar there. And we can just, check it out afterwards to see how it goes. 6:15. Oh, sorry. Yeah, 6:15 and then 6:15 to 10:20. So that's your 6:15 over here. Right now, as you know, the platform and my time are the same. In the winter, we will be 1 hour apart. The platform will be 1 hour behind my time. But currently, this is the situation. Okay, so let's see what else we have. So these are the hours for today. So let's see how the hours did, right? Cycle peak trade hour at 2:48. So I'm just going to make that 2:50. Well, that's your 2:48 here. All right. And that's your 3 o'clock. And you can see the market just chucking a U-E. All right. Just doing a U-turn, nice and easy. What else? 11 o'clock. Let's see what happened at 11 o'clock. All right, so these are trade hours we want to be taking into account. Well, 11 o'clock is there, guys. 11 o'clock here. All right, so the market pushing to the downside. Nice. What else do I have? I have 2 o'clock, 1:57, and then the rest is 10 past 6 in the evening. So 2 o'clock is pretty much this bar here, because yes, 2 o'clock, is it this one? That's 1:45. This is 2 o'clock. 2 o'clock market pushing to the upside. That's what it is right now. You can follow that through. This is euro dollar. Okay. And then I've got 10 past 6 and 8:30. So 10 past 6 is here. And then I'll put 8:30 here. All right. There you go. So having the report and just, reading it is already going to give you everything you need. So when you have a bunch of days that are all red, I've got Saturday here as well. Why is that important? Because if Friday is leading and then you've got a Saturday, which is a red day, it's tension critical, then obviously it's going to be, going up. Okay, so on Friday, if the market is going up on Friday, then I think to myself, you know what, Saturday is also going to be a cycle day. So that cycle's impact should continue. So Friday, we should probably be going further up. So I don't want to be looking at selling. I want to look at managing the trade. Okay. And then obviously you can see what's happening for the whole week. Now I've done a weekly insight. There is no fluff. There's just information. So let's go over the weekly and see what happens. Now, here we're looking at a cycle shift. So this is from June to October, as you can see, right? So it's pretty full on. But this is a regime change, okay? And it's a shift in the market. So, we want to be careful. This could be like a long-term shift in the market, okay? So if the market is turning around, we could find ourselves going for a while in that direction. Summary, top picks, best turn window this week. So just look at the best days, okay, and just trade on the best days or the day after when the market pulls back, which is what I did pretty much for euro dollar. Euro dollar had 2 days, as you can see, Wednesday and Thursday. I didn't do anything on Wednesday. Okay, but on Thursday I saw that the market pulled back into the trading hour, and it is a trade day. If it wasn't a trade day, I would have still done it. Why? Because it's after the trade day and it's a follow-up day. So if there is a trade day happening, let's say on Wednesday, and Thursday is a regular day, I'd be looking at that day to get in if the market pulled back, and this is exactly what happened. Okay, and then we have a trend analysis here. Okay, key pivot point. Now here, let's see. It's already given us the dates, the apex signal for this week. All right, and all we have to do is just look out for those days. Now that is Saturday. It's not a trade day, but I specifically included Saturday and Sunday. It's on there for Bitcoin, cryptocurrencies, but it's also on there for, all right, so if there is an apex there and the market is open, just obviously, look out for it, because that's going to be an important day. All right. And actionable notes, it's all summary. And then we have swing days and timing levels. Now the timing levels, timing plus levels, I've put prices here, but okay, just be warned, I'm working on the prices to extend them further out than the levels you get here. Why? Because specifically when I do the report, it's going to take that close time period as the cycle and the possible levels. What I want to do with the pricing is extend it. So sometimes you might look at a report and you might say, well, that price is well gone. It's true. Why? Because on the day that I did it, it's giving you those levels according to that day. Later on, when I add distance pricing, it's going to give us higher level dates and lower level dates for targets or support levels and resistance levels and targets. All right. So just be warned about that. Okay. Other than that, they're good. All right. And here as well, okay, as you can see, I've kind of starred whatever is coming through. So this is a 3-star day. It's Thursday, July the 2nd, which is also on here, right? Thursday, July 2nd. So by checking that, okay, and then you see that we've got something like, where are we? Here we are, Thursday, July the 2nd. We've got a 3-star here. Then we can kind of like say, okay, you know what? I'll wait for Thursday. All right. So that's the whole week. So by just looking at it for like, 15-20 minutes on a Sunday, you can pick your days and then your hours on those days. And then if you're going to enter the next day for the follow-up as well, then you got like 2 days of trading with high probability success. Okay. Active cycle resonance. Now this I wanted to put in here because some of you have taken one-on-one coaching on market timing. So obviously this is important, otherwise it wouldn't be there. But this is like an add-on benefit to those who took timing from me, so they can see what's happening. All right. Also with the swing day forecast, why is this here? As you can see, I've got grade A, grade B. Just focus on the grade A's. This is the same thing that is here in the June swing day periods, right? It's the same thing. You see, I've got these concepts here: start date, peak date, end date, and you can see there's a cycle here, right? So it's the same kind of thing in the report. Oops, here's the report, right? So that's just with dates, okay? And if you can cluster it with, confluence with your Thursday, then you can say, wait a minute, so Thursday, that's good. Then you can check out the hours as well. So for example, let's see, do I have a 2nd of July somewhere? Are we peaking out on the 2nd of July? 3rd of July is a Friday. No, we don't have a 2nd of July here. Okay, so we might have had a 2nd of July. And if we did, I'd be looking at the clock as well. All right, so that's like important to know as well. Okay, so this is why these have hours here. As you can see, they all have hours. So don't just look at the date, say, oh, that's an hour, blah, blah, blah. Okay, and then that is exactly how it's going to pan out. Now I've got some calculated price levels. Still, once again, just note that the price might bounce and just keep going. So as you can see, there's a resistance here at 1550, 1486, and I've got it at 15 here. I could do 1550 or 1486, which is there. All right, the reason I put it at 15 is because that's where the goodbye kiss zone is there. All right, and this was the first target zone, as you know, once the trade covers, and that's it. So I want to see the market pushing up, and it's closed the gap here today, so I'm going to leave it open over the weekend. All right, so I'm not going to do anything extraordinary. We'll just keep it open and see how things pan out. Okay, but these are some prices. These are some prices, as you can see, to the downside and to the upside. Okay, so these are like distance prices that we can go to, and that's how it is. All right, what else? And I think that's about it. All right, and then the same thing for the month here, monthly summary. All right, in the month, what's critical? These are critical because this is the monthly. Okay, this is a turning point. So because this is a monthly, when things are monthly, right, it's gonna take like a few days for that cycle to sink in before that turn happens. This is why we're going from like monthly cycles to weekly cycles to daily cycles, intraday cycles, and so on. It's a fractal mode, so it's like an accordion, right? So I'm expanding it and I'm bringing it together. So knowing that this month can be important it's going to be like an important month. In the monthly, like I said, it could take like a few days. This is why you got 4 days of red days, one after the other: Monday, Tuesday, Wednesday, Thursday. Why? Because the whole week is setting up for a turnaround which could last. All right, and these are the long-term cycles that we have here. You can just stick with the grade A, or you can keep an eye out for grade B as well. Okay, they all have hours as well, so that's good to know. And that's basically it. You can keep an eye out for those days. Why? Because if they come together, and they should come together, all right, with your weekly or possibly your intraday information, daily insight information, the weekly insight information, then it's like high probability stuff. All right. And then this is a composite price line. Not very, very important, but it does give a few prices here to see where we can get to. So as you can see, I've got 1562 around here, 1516, and so on. All right, and then I've got the month of July, and this is Sunday, and then obviously Sunday is important even if the market is not open. Why? Because what's happening on Sunday is going to be an influence for Monday, and if I have a trade day on a Monday, then obviously Sunday's influence is going to be influencing us on Monday accordingly. It's important, and that's how you can just work through it. This is pretty much the same thing for whatever you're trading. Okay, so these are like the assets that we have: Bitcoin, Dow Jones, Eurodollar, gold, Nasdaq, SP 500. As they get older, as I put new ones here, you'll see the older ones here, okay, right underneath it, so you don't have to go somewhere else. They'll all be archived at the bottom here. If it gets too crowded, I'll separate it later on down the line, but let's see how that goes in the meantime. All right, and that's basically all with the report. If you discover any bugs or anything that's that's looking off, then let me know, and then we'll work on it. And that's about it. Have a good day. Have a good weekend.